kindly subscribe for financial-related information to help you join the 1% richest in the globe. Small businesses can write off a number of expenses as tax deductions to help lower the amount they owe on their income tax. The top small business tax deductions include 1. Startup costs. The IRS or most tax authorities in all countries require you to deduct major expenses over time as capital expenses rather than all at once. However, you can deduct up to $5,000 in business startup costs in the first year of active trade or business. Examples of tax-deductible startup costs include market research and travel-related costs for starting your business, e.g., scoping out potential business locations, advertising, attorney fees, and accountant fees. The $5,000 deduction is reduced if the amount your total startup cost exceeds $50,000. If you set up a corporation or LLC for your business, you can deduct up to $5,000 more in organizational costs, such as state filing fees and legal fees. Professional fees to consultants, attorneys, accountants, and the like are also deductible at any time, even if they aren't startup costs. Business expenses, such as buying equipment or vehicles, aren't considered startup costs, but they could be depreciated or amortized as capital expenditures. 2. Work-related car use. If you use your car strictly for work-related purposes, you can write off all costs associated with operating and maintaining it. When you use your car for business, your expenses for those drives are tax-deductible. Make sure to keep excellent records of the date, mileage, and purpose for each trip, and don't try to claim personal car trips as business car trips. You can claim the mileage you use for business driving either by deducting the actual miles traveled for business or by using the standard mileage deduction of $0.545 per mile driven. Using the standard mileage rate is easier because it requires minimal record keeping and calculation. Just write down the business miles you drive and the dates you drive them. Then multiply your total annual business miles by the standard mileage rate. This amount is your deductible expense. To use the actual expense method, you must calculate the percentage of driving you did for business all year, as well as the total cost of operating your car, including depreciation, gas, oil changes, registration fees, repairs, and car insurance. If you spent $5,000 on car operating expenses and use your car for business 10% of the time, your deduction would be $500. 3. Interest. Interest on a business loan from a bank is a tax-deductible business expense. If a loan is used for both business and personal purposes, the business portion of the loan's interest expense is allocated based on the allocation of the loan's proceeds. You will need to track the disbursement of funds for various uses if the entire loan is not used for business-related activities. Credit card interest is not tax-deductible when you incur the interest for personal purchases, but when the interest applies to business purchases, it is tax-deductible. That said, it's always cheaper to spend only the money you already have and not incur any interest expenses at all. A tax deduction only gives you some of your money back, not all of it, so try to avoid borrowing money. For some businesses, though, borrowing may be the only way to get up and running, to sustain the business through slow periods, or to ramp up for busy periods. 4. Business insurance. You can deduct the cost of your business insurance on your tax return. If you have a home office or use a portion of your home to run your business, you can deduct your renter's insurance costs as part of your home office write-offs. Some people do not like paying insurance premiums because they perceive them as a waste of money if they never have to file a claim. The business insurance tax deduction can help ease that dislike. 5. Advertising. If you pay for ads on Facebook or Google Ads, a billboard, a TV commercial, or mailed flyers, the costs you incur to advertise your business are tax-deductible. You can even deduct the cost of advertising that encourages people to donate to charity, while also putting your business name before the public in the hope of gaining customers. A sign advertising holiday greetings sponsored by Coca-Cola, for example, would be tax-deductible. 6. Retirement plan contributions. One deduction you can take going into business for yourself that is especially worthwhile is the deduction for self-employed retirement plan contributions. Contributions to SEP ERAs, Simple ERAs, and Solo 401ks reduce your tax bill now and help you rack up tax-deferred investment gains for later. For the 2021 and 2022 tax year, For example, you could feasibly contribute as much as $19,500 in deferred salary or $26,000 with the $6,500 catch-up contribution if you're 50 or older. Contribution limits vary by plan type, and the IRS adjusts the maximums annually. Of course, you can't contribute more than you earn, and this benefit will only help you if you have enough profits to take advantage of it. 7. Publications and subscriptions. The cost of specialized magazines, journals, and books directly related to your business is tax-deductible. A daily newspaper, for example, would not be specific enough to be considered a business expense. A subscription to Nation's real estate news would be tax-deductible if you are a real estate owner. 8. Education. Any education expenses you want to deduct must be related to maintaining or improving your skills for your existing business. The cost of classes to prepare for a new line of work isn't deductible. If you're a small business owner with employees, you can write off their salaries, benefits, and even vacation pay on your tax returns. There are a few requirements for writing off salary and benefit expenses. The employee is not a sole proprietor, partner, or LLC member in the business. The salary is reasonable and necessary. The services delegated to the employee were provided. 11. Charitable contributions. You can deduct charitable donations that you make to qualifying organizations. If your business is set up as a sole proprietorship, LLC, or partnership, you can claim these expenses on your personal tax forms. If your company is a corporation, you claim charitable donations on your corporate tax return. 12. Travel. To qualify as a tax deduction, business travel must last longer than an ordinary workday, require you to get sleep or rest, and take place away from the general area of your tax home, usually outside the city where your business is located. Further, to be considered a business trip, you should have a specific business purpose planned before you leave home, and you must actually engage in business activity, such as finding new customers, meeting with clients, or learning new skills directly related to your business, while you are on the road. Handing out business cards at a bar during your friend's bachelor party won't make your trip to Vegas tax deductible. Keep complete and accurate records and receipts for your business travel expenses and activities, as this deduction often draws scrutiny from the IRS. Deductible travel expenses include the cost of transportation to and from your destination, such as plane fare, the cost of transportation at your destination, such as car rental, Uber fare, or subway tickets, lodging, and meals. You can't deduct lavish or extravagant expenses, but you don't have to choose the cheapest options available either. Don't forget that you, not your fellow taxpayers, will be paying the bulk of your travel costs, so it's in your interest to keep them reasonable. Your travel expenses for business are 100% deductible, except for meals, which are limited to 50%. If your trip combines business with pleasure, things get a lot more complicated. In a nutshell, you can only deduct the expenses related to the business portion of your trip. If your spouse, who does not work for you as an employee, joins you on a business trip, for example, you can only deduct the portion of lodging and transportation costs that would have been incurred if you had traveled alone. Don't forget that the business part of your trip also needs to be planned ahead. Thank you for watching till the end of the video.